asset class here within equities. I guess better call it a sector within the equity asset class. Very young, kind of on the same timeline as cryptocurrencies and stuff like that. So, which is to say, like a few years, depending on some of the stocks that you look at, like maybe 5 years worth of data, maybe close to a decade. But
Right.
I don't think that any of these pot stocks, actually, I know because I did the research on them, many of them don't even have a decade's worth of trade data in there, but they do have a mean. And we are far below that mean for pot stocks, which is funny given the fact that pot stocks a lot of them made all-time highs earlier this year. And now they're well below their mean, getting close to all-time lows from the last several years. And it does pose this question, like we seem to be on the brink of either pot and companies around cannabis and everything else are going to completely go away, or they're going to revert back to more normal prices, maybe not those highs we saw this year, but at least somewhere in between. I mean, where do you as a trader and a potential investor tend to reside on this topic?
You know what? I think, quote unquote, growth versus, versus market. We've gone through this phase where it's, Apple, Microsoft was a growth company for many years. Cisco Systems was a growth company, and they slowly evolved into a different type of market performance company. I think this pot stocks went this in a hyperbolic way. Very quickly, they went very high, and then they came off into this very commoditized environment of a bifurcated structure with part of it being legal, part of it being illegal. But what we're seeing is the convergence of supply far outweighing demand at a much lower price point. So, you know what? There needs to be a little bit of a market clearing event and then a little bit of normalization. And then we'll see a broader adoption by a larger slice of the population. That's been demonstrated in every state that has opened up consumption. Sure. So then we see the bounce. So that's kind of a fundamental way to look at it. But yeah, I think we sit lower longer, but when we do go up, I think we will see a normalization here.
I would agree with you. And I talk about it in this week's newsletter out to our community members. And if you're not a member already, you're missing out on low cost and exclusive content. Community.thesmallexchange.com, 50% off your trading fees in the smalls, a lifetime of exclusive content. And there is some whispering of even newer is a better word. Can't get that one out. Merch going out to our community members as well in the next month. We've got new products coming out. It's going to be a real fun one. So get in on the ground floor here. We've been around for a year, the Small Exchange. Join the community today, and you'll see that I crunch a lot of the numbers, and I think you're exactly right, Pete. Like you use a lot better verbiage. I resort to my very young and stupid way of speaking, which is like pot was cool. Now it's not so cool. Will it ever be cool again? And I think that the answer is yes, with the caveat of like, it might not be as cool as it was, right? Like, I think this is a scenario where pot, the industry behind it, and the legalization of cannabis products in different states, I think that stuff is going to continue to get more widespread. And it's going to continue to normalize in your local grocery stores and everything else like that. Now, is it going to happen at the rate and at the expansive notion that people thought in February and March of this year? Probably not. I think we got ahead of our skis a little bit there. And we saw, like Pete said, that growth cycle in pot stocks get really hyperbolic and just get really overvalued very quickly. And I have some numbers here to back up just how high we got, but now also where we reside relative to these lows. And I don't know if you knew it was this bad, Pete, but some of these very popular stock names like SNDL, Hexo, and Tilray here, I mean, they're within spitting distance of all-time lows. Tilray holding up a little bit better, but some of these are really, really low. And it begs the question, of course, risk and return are symmetrical in almost every single trade, 50-50 odds, all of that and what have you. But at some point, similar to energy stocks of, 2, 3, 4 years ago, you do start to play in your mind this idea of like, can it go much lower? Like how much lower can, a 75-cent stock go, a $2.40 stock go? And I swear, I'm not trying to play this game of like, oh, it's 75 cents, so it can't go lower. The thing can go to a penny or zero there. Absolutely. But like, man, we are miles away from the highs, Pete.
Right. No, absolutely, and it's a Tom Sosnoff pot odds kind of play,
Exactly.
So I think you look at that, and for me, it's a function of time. If I can invest in it efficiently, it's a good. I shouldn't say that it's a good trade, but the question is what opportunity do I forego to trade and get exposure to this? And that's really, we're all constrained and by capital. That's the decision I want to make. Not to toot our own horn, but this is where small size futures come into play.
Yeah, you're absolutely right there. That's a better way to say it, like a pot odds kind of thing, where it's like, if I invest in these pot stocks, like, yes, I could lose, 20, 30, 40% of the value of this investment, but the upside, as you can see from these numbers, and this is just in the last 2 years, the upside is so much bigger than that. Now, I'll probably, and I highlight this in the article, like, I'm probably going to have to sit with this for a little bit. This isn't the type of thing where, like, we talk about the 2-year yield futures, Pete, and that was a great trade. And like the Fed can come out and say, like, yeah, we're hiking, and that thing can move 100% to the upside. I don't think this is going to happen at the same rate here, where like it's going to happen this week or next week or what have you. But what's really nice is these S420 futures, Pete, give you about $900 to $1,000 worth of pot stocks for $200. So you can feel good about the fact that, like, it's a small investment relative to all else. It's about $900 to $1,000. I'm only putting up $200 to get that exposure. So I'm not foregoing a lot of opportunities elsewhere. It's something that I'm kind of putting on the back burner, hoping for this rise. And even further, I can go in there and I can sell an MJ call and reduce the cost basis in the meantime as well. We're looking at that 2 futures to 1 MJ call because I don't want to get burned on the upside. But that's just a further ode to how small these futures are, that you need 2 of them per 100 share option in MJ. And I've got now my break even of $9, which means that if the thing goes to zero, I'm still only losing a small chunk of change there. And to the upside, just if we get the pop this week or next week, we've got $135 in my pocket. If we don't, I further reduce that cost basis, and I could get that break even down to $8, $7, $5, or even lower in the coming months.
Yeah, absolutely. And that's, that is what you're working on there is keeping your exposure, reducing your cost basis. And as long as the MJ options give you the liquidity, that's what we're looking for. You're getting it in the S420. You want the, MJ King. It's interesting too, Frankie, that MJ reminds me a little bit of FXB and FXE. When they're in vogue, they're 1 cent wide. There's lots of activity. When they're not, they're 10 cents wide. And it's tough to get stuff done in the middle.
Sure.
But this is the time where adding premium can definitely reduce that friction, that cost of maintaining that position.
Absolutely. And while we're here talking about just the different nature of stocks, we don't have S420 up here on the board, but it is interesting that S420 isn't the only market that's kind of hovering around its lows. We've got these yield products, and we've got metals and crude oil, some of these asset classes, Pete, that are traditionally highly correlated to a stock market that's at all-time highs. And this is what we have to do on a day like today, where it's inside ranges. Daily ranges have cooled a little bit in the last week of trading, not seeing, multi-percent moves in stocks. You got to get a little bit more inventive with some of these spreads here. And that leads me to the last segment, which is this
pick your poison. I like it. Okay.
Rankings. I've got 3 spreads for Pete to rank here. The first one being 10-year rates versus stocks. It's getting even more extreme by the minute as we see 10-year rates continuing to dive lower coming off of Fed Chair Powell's dovish speech on Friday. The stock market feeling very fine to put in new all-time highs. We've got that pair on the board. It's one that we've looked at and maybe a little bit too early to, but a very intriguing 3-to-1 spread that is back at an extreme that it's bounced off of several times and will look to do so again. Next one is one that you actually put on the board for me, so we'll see where it lies on this week, which is metals versus energies, both lower from their highs of the last couple of months. But metals, gold and silver, really feeling it in the last couple of weeks here, just moving lower and sitting there as crude oil moved lower and bounced back, looking at a 1-to-1 long spree to SMO trade in their long gold and silver versus a short position in crude oil. Last one being exactly what we just talked about, longing that S420, but instead of actually selling calls in MJ, trying to sell some tech stocks against it. Not the highest correlation, but the highest correlation of any of the other stock sectors when we look at tech. And that's going to be one that's going to be 6 or 7 S420s to one short tech. And you're seeing the extreme today, these Apple, Amazons, and what have you outperforming the rest of the stock market, a really big extreme between those, but less of a correlation. What do you think, Pete?
Yeah, you know what? I love all three, actually. I think spree metals, spree oil has to go back again to the well here. We've got a OPEC meeting this week, and I'm not talking, I'm not a meetings guy. I'm just event risk wise. I don't know if that's why crude is holding on to its bounce or it's collateral from the hurricane or whatever, but bounces like this into OPEC news or geopolitical news, I tend to like to fade. So putting something against it like spree works for me, especially on a quiet day. Today's if you go across everything except this dichotomy and equity index is very inside day. So I do like the long spree short SMO. Again, it's tough for me with 10-year yields and SM75. I know the correlation between the two,
Sure.
The yield play and the smaller cap bank, more bank rich SM75. I'm not just buying it yet. I think we got a couple of things is that it's a bank holiday in the UK, so markets are thinner. So some of these extremes, I wouldn't mind fading, like S420 and sticks. I like fading that. You can even argue the S420. The problem with the S420 against micro NASDAQ, it's just too big a trade. You're going to need like 21 S420s. So I like the S420 sticks trade. And then the S10Y SM75. Unfortunately, good extreme, but it pulls up third for me.
Awesome. There you have it. There are the rankings from Pete. Will pot stocks ever go up? We'll find out this week and beyond, but at least you got some spread trades in the meantime. All right, Pete, thanks so much for joining me here on Monday afternoon. We've got some time left in the futures hour, so we're going to get into it. Splash into futures coming up next. We'll open up the pairs trader and look at some spreads and other opportunities. We got them for you even on an inside day here on Monday afternoon. Stick around. Thanks, everybody.